Hello, welcome everybody. I'm so happy to be here with you today to talk about risk management. I've been in this field for 30 years and I can't think of a more exciting time. When you think about everything that's happening out in the world today, whether it's natural disasters, pandemics, digital transformation, hacks, the amount of risk that organizations are facing today has never been greater, which makes the role of you and our speakers today more important than it ever has been before. So we have some exciting materials to cover with you today. So let me get started with a disclaimer. Basically, we're going to be speaking about forward-looking statements, so don't take the words and place a big bet on them. But let's get started with an overview of the agenda. So we're going to start with an overview of the journey. So every organization is on some stage of a risk maturity journey, and think about where you are in that journey and how do you advance and move forward and become a more mature risk function across your organization. And then we'll dive into regulations and regulatory change. You know, there's so many rules and regulations depending on where you're doing your jurisdiction, whether they're international guidelines or whether they're regional, state, country, local, specific. How do you take all those rules and monitor and respond and harmonize them to ensure you're going to be in compliance as you conduct your day-to-day business activities? And part of managing and harmonizing those laws is landing on a taxonomy, because if we're not speaking the same language as our peers and people within our organization, there's going to be a lot of miscommunication. So we'll touch on the criticality of taxonomies and how they vary depending on which area of risk you're discussing. And that leads us over to a risk register. So really a critical part of any risk management program is what risks have we identified and what will those risks impact? You know, which types of products are they associated with? Which controls are they associated with? Policies, regulations, all those sort of things. And that's where an applicability matrix comes into play. So this risk is applicable across this critical process or critical business services. So we'll talk about that for a little bit. And then we'll close out by talking about some of the value that was delivered to the regional bank that we have on the line here today from ServiceNow, which is where I work, as well as with Edgile. And then finally, just give you a roadmap to advance on your risk maturity journey. So as I mentioned, my name's Mark Halen. I'm a Director of Risk Solutions here at ServiceNow. My background, I've been building software, risk and compliance software the past 20 years. I was a risk and compliance practitioner for 6 years, Director of Risk and Compliance at Fidelity Investments and consulting at Deloitte & Touche. I've spent a lot of time in the financial services space. And here at ServiceNow, I have risk responsibilities across the world for helping to build out our products and bring them to market. Now I'd like to toss it over to one of our esteemed partners, Edgile. Why don't I let you introduce yourself, David?
Thank you, Mark. This is David Decter. I'm a partner at Edgile. For those that aren't familiar with Edgile, we really do three things. We do governance, risk, and compliance, business continuity management, security operations, and vendor risk management. That business is exclusively partnering with ServiceNow. We also have an identity and access management business, as well as cloud security. I've been in the business now over 20 years, and this project with John at a regional bank was truly a pleasure. And John, please introduce yourself.
Sure. Thanks, David. So I'm John, Chief Risk Officer at a regional bank. I've been in this position for about 5 years, but I've been in the risk discipline for about 10 years or so now. Oversee portfolio stress management, or portfolio stress testing, portfolio risk management, in addition to our enterprise risk management framework. And then here more recently, compliance is beginning to come under my vertical as well. So you have kind of this confluence that really lines up nicely from a GRC perspective.
Thank you, John.
Okay, so let's talk about the overview of the journey. So when you think about the work that was done here, we're going to touch on three primary areas. One is around enterprise risk management, second around operational risk management, and then finally we'll touch on information technology risk. And I think it's going to be interesting to the audience to see the differences and how we break this out when we talk about taxonomies and applicability and things along those lines. So as we get started, I know we gave you a little bit of a background here when we were doing the agenda, but I'd like to open this up with a question to John. And really, John, if you wouldn't mind sharing with the audience a little bit about what were some of the challenges that you had in managing your risk program within your organization, and also elaborate on what they involved, how long have they been around, but just in general, what caused you to start going down this path with Edgile and ServiceNow?
Yeah, so as I mentioned earlier, with compliance becoming a little bit more of my area of responsibility, you know, kind of taking a step back, like many institutions, we were managing processes in spreadsheets, email, and as we continue to add more and more to that framework from an enterprise risk management standpoint, it just becomes too much to manage, and frankly, it doesn't scale. We were already familiar with the Now platform because we leveraged the ITSM modules for our IT management processes. So we already had an initial investment in that. We already had some level of expertise and knowledge within the ServiceNow environment. So we knew that ServiceNow had the GRC offering, or the IRM, Integrated Risk Management module. So we wanted to kick the tires on that a little bit and see if that was a way to kind of help us automate some of these processes that had become manual and burdensome, and with the end goal of trying to pull us back to where we're spending less time managing the reporting and management, managing the low-level kind of functions from a risk management standpoint, and being able to pull back and actually manage the risk.
Yeah, no, those are pretty common problems that we see in the market all the time, and high reliance on end user tools, ad hoc solutions, all those sort of things that is often a reason that drives people to a automated solution, that ability to scale, because the work doesn't go away. And as I was mentioning earlier, we're seeing even more and more need for risk management, right? Thanks for sharing that with us. So why don't I hand it over to you, David, now, if you'd like to take us through the journey.
Thank you, Mark. So to frame this, the scope really included 3 passes. And to orient the audience with this slide, the 2 axes are really speaking to, on the one hand, management's desire to have high confidence, a lot of detail and precision in your risk and compliance posture that's being reported back out, not only to the regulators, but also to management. At the same time, these organizations have limited resources to apply to the problem set, and therefore need to be not only efficient, but also risk-based. And it's in that vein that we begin with Pass 1, a risk register. In this case, we focused on not only enterprise risk and operational risk, but also IT risk, and went through a process that we'll describe in more detail, whereby we selected from Edgile's Automated Regulatory Compliance, or ARC, content subscription that's available on the ServiceNow store, specifically for financial services. So there's industry-aligned content packages that look at a variety of laws, regulations, and then harmonize those together, creating both control objectives and risk statements. So that's what's then used to apply the risk methodology of the organization. And at the output of that, the client is left with a risk register, and you move on to pass 2, whereby you model the operating environment. And so those risk and control objectives are then applied where they're relevant to the corresponding applications, business functions, processes, infrastructure, and so forth. In pass 3, we then seek to help our clients very quickly identify what capabilities are in place and identify any potential gaps and provide them with the tools to then manage findings and remediation plans. This is leveraging the power of the ServiceNow platform and specifically the survey functionality. In terms of our approach, we take a reporting first approach. And so the idea here is work backwards from your end state and specifically what will be reported out to the different regulators, as well as your different management, board, and internal line management of the organization. Work backwards from those reports and make sure you have the right fields, relationships, calculations, and associations in place. We have a rapid build and walkthrough philosophy. We don't want anyone surprised, and frankly, we don't want to be surprised at the end when we get to user acceptance testing. So we preview the builds early. Moreover, organizational change management is very important to ensure the adoption of the new solution. And so we emphasize training both from a management audience who's going to run the campaigns and run the platform, as well as from an end user perspective. And the final point there on philosophy is workflow last. And what that's really getting at is as we move in this digital transformation world from spreadsheets and email, we need to revisit the process now that it's been automated in ServiceNow to remove any potential friction. And so we smooth out that process with our clients and then automate that with workflow. A few points to highlight on the right-hand side of this slide are some key accelerators and activities. When we began this project, day one, we already had business, functional, and technical requirements already documented, as well as corresponding user acceptance test plan. We then work through the various decisions that our clients need to make. Think of it as a guided journey. We capture those decisions and update the requirements and UAT plan accordingly. We then perform the configuration work within ServiceNow, and then we wrap up the effort with user acceptance testing until it's defect-free, and close out the effort with those 2 trainings, one for a management audience and again, one for an end user audience.
Well, David, that's excellent. I was going to say, just thinking about this approach, and I hear the same thing over and over again from our customers that work with Edgile, how they really appreciate the rapid build and the walkthroughs up front, as well as the overall program. Let me ask John for a minute. What did you think about the approach that Edgile took with their implementation, and how may it have differed from approaches you've taken in the past?
Yeah, sure, Mark. So, first of all, I was extremely pleased with the process and the outcome of this, and I can echo the feedback that you've received from other Edgile clients that this was curated all the way through and was really designed to walk my organization through all of the key decision points up front without being so locked into a decision that you would have maybe made on the front end, right? So you would identify the general path and some of the decision points that would be critical to kind of help you. But instead of giving you a blue sky kind of an opportunity, Edgile said, here's a good path to potentially go down. And here's option 1, 2, and 3. Given what we know about you and your organization, we recommend 1, but here's an alternative. And you kind of just keep iterating there. But they had, I won't call it a fully defined path, but it's a well-defined options that were available for us to take. That streamlined the process quite a bit. The one piece that was, I know we'll get to it a little bit later, but the content pack and the harmonized laws turning into citations, turning into risks is really another big lift there. But taking a step back, really, the Now platform is powerful, but honestly, from my perspective, it's also overwhelming because there is so much power in that. And so having someone that can help walk you through that and right size the adaptation of the Now platform for what you're trying to accomplish with that reporting first notion that David mentioned is really what was different about this than any other integration or implementation that I've gone through.
No, that's great. It's a great, thoughtful response. Thank you, John. And David, it sounds like you have a very pleased customer here, and it's great to hear. Why don't we kick it back to you, David, if you'd like to move on to the next slide?
Thank you, Mark. Thank you, John. So the next section, we're going to double click on the harmonized laws and specifically Edgile's automated regulatory compliance content that was leveraged to help accelerate this process. So for those that have not been out to store.servicenow.com, there are a variety of ServiceNow partners as well as ServiceNow solutions and content packs available. Just a brief overview of what this content does. It basically includes a monitoring service whereby we will document and decompose the various laws, regulations, industry standards in a verbatim fashion. We will create not only control objectives, but also risk statements. And this content includes the updated source content monitoring with quarterly releases, as well as a regulatory change management solution that allows for very deep analysis into the potential impacts of those changing laws and regulations and how they may impact your organization with a closed loop workflow to facilitate that journey. A few of the specific details here. We started with this financial services ARC content pack. There are over 550 laws, regulations, and industry standards available. And in the case of working with the bank, we really honed in on approximately 67 of these authority documents. And those documents then, as John pointed out, have all the detailed verbatim citations. There were nearly 10,000 of those detailed citations. 10,000 citations is a lot to deal with for any organization. And so what we do is we harmonize those through these integrated requirements. In this case, there were under 500, about 483 that were produced that had control objectives and risk statements. A few related data points. This included not only IT, which comprised approximately half of the control objectives and risk statements, but also enterprise risk management and operational risk management, which we're going to dive into a little bit more here. John, I would like to maybe see if you could elaborate a little bit more. You were very generous with your description of the process and the value that the content provided. John, would you mind sharing a little bit more about the experience as it related to the content?
Yeah, absolutely. And it may help to kind of frame how I had been handling enterprise risk management prior to this. And so the way we were doing that was more of a top-down, right? So identify the big buckets of risk and then begin defining and delineating down from there. What this process allows for is more of a bottom-up kind of build. But bottom-up can be very overwhelming and very difficult because you've literally got to dump all of the Lego bricks on the table and sift through them and figure out, okay, well, does this apply to me? Does that apply to me? How does this fit together? And really what the Edgile process provided is all of those links were already created for me. So it was literally a menu was presented for me of here are all of the regulatory frameworks, here are all of the things like NIST standards from an ITRM perspective, some of the specific regulatory requirements that my bank has to comply with were also in there. And as you go through there, you just literally say, yes, that applies, that applies, that applies. And then automatically, what comes out of that is this 9,484 citations. So the detailed references to the specific body of knowledge that we are trying to comply with. And then, as David indicated, then those are distilled down even further to kind of get those boiled into key concepts. And those are things that then can be linked up into our enterprise risk management framework. The first observation is 483 for my size of bank is too many. So this is kind of a broader net in order to be able to start from a risk perspective. But it's far easier to prune back than it is to have to build from a bottom up. And so that's really the approach we took here is bottom up, but it was a rolling start as we do the bottom up. And then now I'm in a position to where I have something I can react to, peel back, and really dial into my organization. So this was, I hadn't seen anything like this out there in the marketplace. And this was a tremendous rolling start for us because all of a sudden we had content loaded in this platform. And then now it's a matter of, how do we want to leverage it and how do we want to deal with it?
Great. Thank you, John.
Yeah.
So now we're going to deep dive into the risk taxonomies that were used. So again, we're going to speak around enterprise risk management, operational risk, as well as IT, and talk through the process here. So specifically, we started this journey then, if you think about reporting first, we need frameworks and models to roll back up the risk results. And so we started the journey and brought to the table an enterprise risk management framework. It addressed all of the pieces that a bank would want to focus on, everything from credit risk to market risk. I will point out that we have operational risk here on the top right, and then information and technology. And the elegance of this model is that you're able to then roll it all up as well as drill down into the different areas. You have here operational risk management. This is a Basel aligned model. And then you have IT risk, which again was all tailored for the bank. And what's happening is you have, in this case, 6 risk categories, 26 risk topics, and then all those detailed control objectives and corresponding risk statements will then roll into these different models. As we progress then into the risk register, what happened here is we were able to sit down with John and his colleagues and brought to the table risk methodology templates. The bank already had their own risk methodology, and we learned from one another and we're able to tune that to arrive at impact and likelihood definitions that corresponded with these 5 levels on the 2 axes, as well as tuned the specific intersections for both inherent and residual risk. At that point, we then took the output of that risk register, and we had preceded the inherent risk that exists without any compensating controls or safeguards. And then we sat down and went through a workshop to then calibrate the impact and likelihood levels for both the inherent risk as well as the residual risk, to take into account the bank's safeguards and compensating controls, and then capture that high water impact level, whether that be operational, financial, legal and regulatory, or otherwise. I'm going to pause here and see if John or Mark have any other comments about the risk piece.
Yeah, David, I'll jump in here. This is kind of a continuation of, this is a component of that quick start pack. And, I can kind of describe the workshops of going through these 483 risks that we were looking at on the prior slide, or the earlier slide, that kind of got distilled down. This ended up being a very efficient way of working through these. We grouped the various risk statements by topic, and we pulled in relevant stakeholders. So for things that were more in the IT risk management space, I pulled in our CIO and our CISO, and we were able to sit down and virtually around the table, rapid fire, and literally just go down one by one and say, okay, with the control environment that we have in place, what's the residual risk? And we were able to go through a large number of these in a very short order, to where we were able to begin sorting and dealing with the bottom-up approach in a very effective manner, to where at the end of it, where we came out, we were able to apply some sorts and say, okay, are the ones that we've identified as high, do they all seem high? Are they truly our high risk? And the ones that we have in the low bucket, are they really the ones that we would consider to be low? So can't say enough about the time to get into action and actually dealing with the management of risk. This is really where it was in assigning that likelihood and the impact on a residual basis, and figuring out where do we want to focus our energy and efforts moving forward as we get this loaded into the platform. So this was another big win as part of the process that we went through.
Thank you, John. Hey, and David, I did have a question. I'd be interested in thoughts around the role of the executive leadership and or the board, as far as when you think about setting the risk appetite and then drilling down to the next level of setting risk tolerances and that sort of thing. So maybe some insights, John, from your organization, how you engage with your executive leadership team or your board team as far as defining these risks and setting the tolerances and matters along those lines.
Yeah, so the way we have approached this is we wanted to make sure that we did an initial pass through that, and to where we kind of did the initial gate cut, if you will, and say, hey, these are the things we believe are high, these are the ones that are low, medium. And then when we have those grouped together, then as we pull back and we look at the overall framework, for us, we're a credit shop. We would expect to take more risk in the credit area. We have a larger appetite and desire to take risk in that area. But maybe we have lower appetite in the compliance area. Talking about that at a high level is very different than bringing specific risks, so these 483, bringing those to the board and saying, here's how we think about risk. And the combination of these really seems to dictate that, this is how much risk we would be willing to take. Are we comfortable with that? Are we not comfortable with that? So this ends up kind of providing a little bit more granularity than you would otherwise. The alternative is bringing a blank page to the board, right? And saying, well, how much risk do you want to take in area X? And sometimes you can get some good dialogue and discussion, but I found that the more you can put some real examples in front of them, you're going to have a more rich dialogue, a better understanding of what's coming out the backside. And at its essence, that's really what enterprise risk management is about, is having a good institutional understanding of the risks you're taking and a good understanding of, is that consistent with your appetite? And if not, what are you going to do about it? So.
Great insights, John. Thank you.
Thank you. So now we've completed pass one, the risk register, and all that data was then seeded into the ServiceNow IRM platform. And at this point, we're moving on to pass two, which is the applicability matrix. And what happens here is the left-hand side are effectively the output of the risk register. All the different risk statements and control objectives are wired together. And then on the right-hand side, what happens is we bring to the table another accelerator, which is a modeling of typical operating environments we would find in a variety of different industries. So we brought, in this case, a bank template, and we modeled together then the different business functions, processes, and applications. And we use a spreadsheet to facilitate this and simply place an X where the relevant risk and control objective should be assessed for a given part of the bank's operating environment. And that was then used to seed entities and entity types, and moreover, was then used to create diagnostics. So again, diagnostics are those surveys whereby the end user is presented with a series of questions with a very clean user interface that's accessed through the ServiceNow portal. And those diagnostics then help the management team understand where potential gaps may exist. John, I know you've worked with the entities and entity types. Perhaps there's some lessons learned from this and some experience you can share with the group on this part of the project.
Yeah, and so from an entity type and entities, it's really all about scoping and profiling. And admittedly, that's an area that even after the engagement, I'm still struggling with making sure that I'm getting that aligned with my organization and how I want to think about and view risk. So that'll continue to be refined as we move forward. But again, what this process allows for is some quick fire, right? Saying, okay, for this particular risk statement, what are the different components or different areas of the business with which this particular risk statement might apply? And particularly a lot of the ITRM components of the information technology risk management pieces, Edgile already has a lot of those kind of preceded for you, so you can step through and begin leveraging that. When it comes to more of the pure enterprise risk management risks, you want to give some thought as to how you want to apply that to your own organization. My organization is not multi-division, so it's a relatively small organization. And so we don't have a ton of divisions or things of that sort, but we do have different business areas. And so really thinking about how you want to apply the risk model and overlay and intersect that with your operating environment does become key. And again, being able to visualize this in kind of a matrix format allows for you to visualize and say, okay, yeah, we're missing an entity going across the top columns there, or or this one doesn't really apply to our organization. So that's part of the continual refinement. But again, from a quick start perspective, you're immediately digging into trying to answer some of these kind of questions that are more meaty, right? How do you want to deal with the risk within your organization? How do you think about it? Who are the people, or what are the departments that are responsible where this risk either emanates from or that it applies directly to? And, we're already on mile marker 3 instead of being at the start of our journey trying to figure out how do we want to approach this. We're now digging into the more important areas of how do we want to manage this risk and how do we think about risk. So this is a step that becomes very helpful. But admittedly, I continue to stumble on this as we continue refining and refitting this. But I can't imagine where we'd be if we hadn't started the journey at all.
Yeah, it definitely is an evergreen process and will be updated over time. Thank you, John. So I know we're running up on time. Want to quickly cover the value delivered and specifically take you through the different value propositions and capabilities that were delivered to the bank within 8 weeks. So if I draw your eye to the 12 o'clock, there was a library of harmonized laws and regulations. That's that step 1, pass 1, content selection. At 1 o'clock here, we were able to categorize all these risks into ERM, ORM, and IT risk management frameworks with the ability to roll that up and consistently then rate the risks across the bank. We also were able to sustain compliance requirements through the regulatory change management solution. At 6 o'clock there, we were able to visualize the risk that was rolled up by category, both qualitatively and quantitatively. Through our diagnostics, we were able to assess controls and risks. And then through the findings and remediations, or issue management, if you will, we were able to track problems to resolution. We were able to establish then, on the last part, consistent linkage between the risk and the business. Again, this was an 8-week effort. The bank was very generous with their time and was very collaborative in this project, and it was truly a pleasure for us to work with everyone. Mark, I know you had some points to make here on the value. I'll turn it over to you.
Thank you, David. Yeah, this is one of the most common questions we see in field here at ServiceNow is how do you demonstrate value to your executive leadership team? We have a methodology that we apply called Validate the Value. Typically after a customer's implemented, we can come back and after a given period of time and assess what type of value they are receiving. But in advance of that, we'll also work with firms to build out projections and scenario analysis so you can look at what is the expected payback if we go into this agreement and what is the benefits we're going to expect to receive and quantify it. So with that in mind, I'm curious, John, from your perspective, going into this effort, what were your expectations around value and where are they as far as realizing that value? I know you're just into this really for a very short period of time, but where do you expect to see value, and are you seeing any value paying off already?
Yeah, so certainly there's a couple of areas. One is I was in the process of needing to refresh my enterprise risk management framework anyway, so that was kind of on my calendar of responsibilities. And also, GRC has kind of been in the background as GRC because that's what it was referred to as when it was originally put on my plate about 3 years ago. And we didn't know where to start, right? So we were like, this sounds like a good idea, but what does it mean and how do we get started? and I mentioned earlier, we were already on the ServiceNow platform. And so it was like, well, hey, ServiceNow does this. Could we get into this space? So it was kind of, perfect opportunity to hit, on the now called IRM, Integrated Risk Management modules within GRC, and hit the refresh of my enterprise risk management framework and find that intersection. And the way I initially quantify value is that I've now got something that I can react and respond to and continue to refine. So instead of being back at the starting gate, I've moved forward with something that directionally is correct, that is enhancing and increasing my maturity level in both the enterprise risk management space as well as the compliance management space as well. So I haven't done the math on it, Mark, but this has probably saved me a year in terms of sitting there at mile marker, 0, scratching my head as to how do I get started. Moving forward, the value that I expect to extract out of this is really, it's kind of an intangible, right? So it's the goal of ERM is to have richer, more robust dialogues with the risk stakeholders, to have a better understanding of what risks are occurring within our organization, what the mitigation or risk transfer strategies are relative to all of those. And that's the difficult piece in selling that from an executive buy-in perspective is you can't quite go and say, the ROA on this is, 22%. But the benefit that I had is my current CEO was our chief risk officer. So he came up in the risk discipline, knew and understood the value of having command and control over risks within the organization. So I didn't need to do a whole lot of selling up on this. It was really more about just proving where do I want to go and where do I want to take this program. And this allowed me to get there much more quickly. So it was really a time savings, but now I'm at a point where I have the vantage point of looking and saying, okay, now that we've got a platform, we've got it loaded with content that's been applied to our organization, how do we want to drive additional value out of this? So I wish I could give you this saved me, $800,000, and I could probably come up with that. But it's really more about the soft thing. It's more about we've accomplished something because we've made a decision and we've made a good decision in heading out. So now we started the journey.
Excellent. I'm so happy to hear that. I mean, time saved is money saved. So thank you for those insights, David.
Thank you. And so as we wrap up, we'll quickly cover the roadmap and talk about some of the future journey activities that the bank is contemplating here with ServiceNow. So as the assurance journey unfolded, phase 1 really focused on the content. Again, that was those harmonized laws and regulations that produced pairs of risk statements and control objectives. In phase 2, we modeled the operating environment and applied then that content to business functions, processes, as well as IT assets. In phase 3, we focused on the ability to assess risks and controls. And at that point, the risk register was populated. We had diagnostics built for both SaaS applications as well as on-premise applications, as well as the ability to manage any issues or findings and remediations that came out of that process. And then what's being considered now for future phases would be policy, specifically the policy lifecycle management, the ability to publish those policies on the knowledge base within ServiceNow, as well as the ability to handle policy exception management where appropriate. So this was really the roadmap that we went on, and I want to thank you all for your time today. Mark, I'll turn it over to you.
Great. Thank you so much, David. Before we take questions, I just wanted to briefly make everyone aware that ServiceNow has its biggest event of the year coming up, which is Knowledge 2021. This is really a great opportunity to bring together a community of people who are engaged with ServiceNow solutions and products. We'll have a slew of presentations, demonstrations, labs. We break it out by track, so if you're interested in a specific industry or a specific product, what have you. But I encourage you to register and participate when you can. And the second thing I would call out is we have a series of on-demand webinars, which is also at your convenience if you'd like to peruse those. You should see a box in the lower right-hand corner of your screen that will allow you to provide a link to register for Knowledge 2021 as in the webinars as well. So with that, why don't we open it up for questions? And I see some of them have been flowing in. Let's see, here's one that says, there's actually a couple. Here's one that says, what are some tips for gaining executive level buy-in? And I linked that to a second one that's in here too, which is, where do you suggest companies kickstart their journey to IRM? So let me throw that out to the two of you. What are your tips for gaining executive buy-in? And then if you could elaborate a little bit more on how to kickstart your risk management journey and to advance toward a more risk mature organization.
So David, I can start with executive buy-in and then you can layer in. I already kind of made a little bit of a mention to that I had it a little bit easier than maybe some of the attendees on the line might have it, in that I already had kind of that embedded support via my CEO coming from the risk track. But there's still an additional selling point that I have to make to some of the other executives as well. And I had to make this same sell back even when we started enterprise risk management. And it's really more so about we expect to have control over our organization and having an understanding of where the risks come in and how we're going to manage those and what that indicates that we need to change or do differently from an operational standpoint. So really making that connection that risk isn't this esoteric kind of thing that you just do. It's not purely a compliance play either. But there's a risk avoidance component there, but then there's an opportunity that's embedded within enterprise risk management if you do it correctly, if you do it optimally. And I've seen different implementations of enterprise risk management and IRM, and some maybe necessarily go down a road of pure compliance. Others go more from an enterprise risk management. And what we were trying to do was thread the needle and do both of those because different stakeholders on your executive team are going to have some of those different interests. So I would try and make it less about a compliance play and more about an enterprise control, with control not being a bad word, right? But having control over the strategic direction you're taking with your organization.
Mm-hmm.
Yeah, David, anything you would add to that? Oh, sorry.
Yeah, and we're seeing something very similar. In fact, as we reflect back on our decision we made as a firm a little over 3 years ago to go to market exclusively with ServiceNow as it relates to IRM, business continuity, SecOps, and vendor risk. What we saw was clients were heavily invested in configuration management database, CMDB, if you will. They're building out a service catalog and a service portal. There's a lot of investment already made in defining the business hierarchy, the different assets, having change management and the workflow ticketing engines. It made a lot of sense to us, and it's proving out to make a lot of sense to our clients to then piggyback on that investment to layer in enterprise risk, operational risk, and IT risk management, as well as compliance management. And what our clients are then finding is that it's a relatively easy sell. The organization is already trained and familiar with ServiceNow. So they know how to go into the portal and find click the button, show me just my issues, or show me just my diagnostics and tasks that I have ahead of me. And so that's been really, really good to see that understanding played out in the marketplace. Yep.
Yeah, no, fantastic. Hey, just being sensitive to time, we've got 6 minutes till the hours, and I'm going to suggest we take one more question that just rolled in. It relates to risk appetite, which we touched on earlier. The question is, what is the approach adopted to assess the risk appetite of the bank and management? And I'll toss that to either one of you.
Yeah, I can start with that. You may recall that grid that was kind of like a heat map, to where in the upper right-hand corner you had that dark red, and then it had a gradient where it went orange and yellow and green. Those are actually representative of kind of the intersection between impact and likelihood. And for each of the risks that we've identified, we've associated kind of a grading scale or a rubric of, well, how much dollar loss would that be if we're thinking about it from a financial perspective, right? Because not all risks have a direct financial. Some are operational, some are legal risks, some are, downtime for systems, et cetera.
Sure.
And so what we had is, as we were going through ranking and rating each of those risks, what we would identify is, okay, well, is this translating into a dollar loss from a percentage of net income or a percentage of assets? Is this a credit quality decline, since we're a credit shop? Is this an operational matter? And if so, what's the impact? Are we going to be down for 3 days? Are we down for 8 hours, et cetera? So you start doing some gradation within that. And once you have those, then the question becomes, are you okay with that? Given this particular risk area, are you okay with having this much of a financial risk at play? Are you okay with losing 3% of net income in this particular area? The answer may be yes. If it's your core business and you expect to take risk there, like for us being a lending shop, we expect to take credit losses. If we're not doing something right, because we're not pushing hard enough. But what's that limit? As we think about, legal risks, the same kind of deal. We would look at that and say, well, maybe it's less about the dollars when we think about legal risk and more about the reputational aspects of that. Or maybe it's more about enforcement activity that would be brought upon us. And maybe we have zero appetite for that. And so I think that's where you start. So you rank and rate the risks according to how you think about them. What would the impact be along a number of dimensions? Again, whether it's operational, and it's however you define it for your organization. For us, we chose to rank it on credit quality, financial impact, operational, and regulatory, and then also a reputational dimension. And so for each of those risks that we went through and identified in that register, we thought about, is this a financial risk? Is this a reputational risk? And if so, let's kind of dial in our rating and ranking of that risk in those terms, and we created a grading scale. And so a 5 in that case means more of a catastrophic type of a deal, the way we had graded it. Then you pull all those back and you have that conversation with the board about, all right, here's what our risk profile is. How does that intersect, or how does that dovetail in with what we would expect to take? And kind of the rule of thumb was, from a financial loss perspective, quite honestly, we said, how much loss would we have to take before our CEO is completely uncomfortable with going to the board with this? Right. So it's like, well, what would be an uncomfortable, difficult conversation, and what do we not want to have happen? So that's the way we kind of thought about it, is more from a practical standpoint. But it starts with having a good listing of all of the risks and a good understanding of how those risks apply to your organization. And then you can have that conversation. And it's a little backwards from what you would get out of an academic approach, where you say, well, I'm going to start out my company and I have risk appetite X, and then I'm going to craft my processes, based on that. Reality doesn't always afford that luxury of doing that. And sometimes you don't know what your risk profile is and what your desire or appetite for risk is until you look at, well, how much risk do I actually have? And am I okay with this or am I not?
Right.
So
that's the key question. Yeah, are we okay with it? And you're asking all the right questions. I think that was an outstanding outline of the discussion around risk appetite and how to interact with the executive team. I just wanted to close out here. We're at the bottom of the hour. I wanted to thank my esteemed guest, David Decter from Edgile, as well as John from a regional bank, and encourage everyone to participate in Knowledge 21. And don't hesitate to reach out to David or myself if you have any follow-up questions or comments. Once again, thank you all for your time, and thank you to my speakers today.
Thanks, Mark. It's my pleasure.
Thank you, Mark. Thanks, John.